So IHT is something that there hasn't been an awful lot of change in recent years. For example, the nil rate band, which is effectively a threshold at which you don't pay any inheritance tax on, that's currently 325,000. There's a separate sort of resident nil rate band, but for this purpose, we're just ignoring that for now. So generally, you get 325,000 inheritance tax free. Now that band has been at that level since I think it's 2009. I think it is. So we're now at a point where, particularly if you look at property, and again, it's kind of covered by the resident nil rate band bit, but asset prices have kind of gone up massively since then, and yet we're still the nil rate band's been kept at the same level. So there hasn't been an awful lot of change to inheritance tax. So it was quite.
It hasn't risen with inflation then.
No, yeah. So the nil rate band stayed at the same level since 2009, albeit there's been this additional one that I think it's George Osborne brought it in to kind of cover off main residences and that sort of thing. But generally, it's been kept at the same level since 2009, the standard nil rate band. So there hasn't been an awful lot of change within IHT over recent years. So again, I think the Office for Tax Simplification sort of had a look at it, and I think in 2019 it was, there was a report that they wrote which effectively said that there's only 25,000 estates in the UK actually pay inheritance tax, but about 10 times that amount actually have to fill in all their IHT forms and whatever has to go to revenue. So there's a lot of sort of pen pushing, for want of a better term, even though there's actually no tax to pay. So, and inheritance tax and nil rate band, which we spoke about in the previous video, that is going to stay at 325 grand, and also the resident nil rate band, the other one for private properties, is going to stay at 175 grand until April 26. So, we spoke about this on inheritance tax.
Yes, we did. Yes.
The nil rate band, as we said before, has been 325 grand since 2009. So, if this holds true, it's going to have been frozen from 2009 to April 26 at the same level. So, well,
it's obviously a nice little learner, that one.
Pretty good, isn't it? It's pretty good, especially with how property prices in particular have sort of risen in that point. It's yes. Not bad, is it? But nice. So broad terms, no direct rises, but probably indirectly there will be an increased tax take through those measures. Yeah,
got it. So I'll put a personal opinion on that. I think it's very stealthy, as I said.
Yeah.
It's stealthy. Yeah,
you're right. It's that. I mean, if you wanted to sort of look at optimistically almost, you could say he's actually been quite clever, because he's kind of he's kept his manifesto pledge by not increasing taxes, but by freezing it, he has managed to increase the tax take from those areas anyway.
Yeah. So it's clever. It's shrewd. Yes. Yeah. I think Gordon Brown was particularly fond of freezing thresholds to get people into higher tax bands and things like that. So it's again, it's sort of, he's either reversing what one of the previous chancellors done, or he's reintroducing things from the past.
Yeah. So some of the changes that they were talking about is a possible review of gifts out of income. So typically where you make a gift to someone out of your income and it doesn't affect your way of living, if you like.
How much can you do for that, Tom?
So there's no set amount, as long as there's a sort of a burden of proof to show that your sort of way of living, if you like, hasn't been sort of decreased, if that's the right term, as a result of making the gift. So as long as you can sustain your kind of way of living, there's no limit as to how much you can gift out of income, pretty much. Yeah. So that kind of then is an additional exemption that is outside of that no rate band I spoke about. So there's talk of sort of reforming that possibly, and I guess potentially removing it. It's it's all sort of speculation a little bit. The annual allowance. So again, there's an annual allowance for inheritance tax in the same way that there is for capital gains tax. That's currently £3,000 a year. What they're possibly looking at doing is increasing that. So there would be a slightly higher amount that you'd be able to give each year and not have to worry about it at all. But the sort of offset to that would be that there's currently an exemption on gifts on a wedding, for example,
right,
that would then fall within that allowance. So they'd give you more of an allowance on the general annual one, but then they'd take it away somewhere else. That makes sense. So it sounds
gives with one hand and takes away with the other, right?
Exactly. Yeah,
exactly. Smoke and mirrors. There you go.
So it sounds great, but actually you'd lose something elsewhere.
Of course, probably lose a bit more, right?
Yeah, exactly. Yeah. So there's that, and then an interesting one again that might impact some of our clients is that they're talking about removing business property relief. So again, if you sell it, subject to certain conditions being met, if you give away a qualifying business asset, potentially that is 100% exempt from inheritance tax. Now they're talking about taking that away unless the shareholder, I think it said, has a controlling interest in the company. So that might sort of have a big impact on succession planning for a lot of our clients if they were expecting BPR to be available in the future. So again, it's obviously all speculation. It might not actually happen, but it's that could have quite a big impact on sort of family businesses and any future successions.
Things to think about. Yeah.
Again, so it's something to think about, and there is certain planning and certain structures probably that could deal with any problems that come up. And again, it's going to be a bit of a cliche in this catch up, Chris, but the key is to talk to your advisor, really. One thing that the OTS report suggests should be looked at is removing the CGT uplift on death. So at the moment, where someone has a capital asset that they hold up to the point of death, if there's an underlying gain within that effectively gets wiped clean, for want of a better term, on death. And then whoever inherits the asset would get an uplift in the base cost to the market value at that point. So what the report is talking about is effectively taking that out. So there would presumably then be capital gains tax on death. And I think, from what I understand, the main driver...
CGT on death?
Well, I assume, from what I've read, I didn't see the detail of it, but I assume if they're talking about removing it, there would effectively be a capital gains tax on death. Before then, the whoever inherits the asset gets the uplift to that market value, right? And I think the main sort of, I guess, focus with that is that it kind of encourages people to hold on to assets up to the point of death, because then it wipes, effectively you wipe away the capital gains tax that's underlying, possibly. But again, politically, then it means that assets aren't being passed down generations when perhaps they might otherwise be more useful, if you like, if that makes sense. So again, it kind of it strays into inheritance tax a little bit.
I guess to finish off, it's this is a tax on wealth, so to speak.
Yeah.
And that may be more politically acceptable because it's seen to be making the rich and wealthy pay, which has been a debate for the last decade.
Years and years.
So there's quite a bit of planning around that, quite a bit to think about, and even start considering now.
Yeah, absolutely.
Talk to your advisor,